if we can go back to your goal, your short-term goal, helping people in emerging market economies. One question that came to mind for me is if they want to mint currency because they are in need of currency, right? Then they need to have these stablecoins to begin with, right? Isn't that a bit tricky for them?
Well, yes, it's a great question. So the thing is that an ordinary end user never would really have a reason to mint or redeem these stablecoins. They would just be purchasing them from another user or from a liquidity provider. And so the minting and redeeming actually only happens very infrequently, and that's actually sort of similar to fiat-backed stablecoins in general, where like an ordinary crypto speculator wouldn't go mint a fiat-backed stablecoin on a normal day. They would just be buying or selling it on an exchange. So in our case, I could actually, I don't know if you're interested in this, but I could share my screen and show you like a live 1-minute demo of the app of like what it's like for a user in Venezuela to buy the stablecoin, if you're curious.
Oh, that would actually be great. Let me just put you on the stream again and see if that works. Let's give it a try. I think that would be great because I do want to get back to what's happening on the ground.
Okay, great. So this is our app. Mm-hmm. It basically is if you've used like Cash App or Venmo, it's kind of a copy of Cash App or Venmo. The thing that's special about it that we've achieved so far that we're super excited about is the methods for getting money in and out of your balance. Once you have money in the system, we even just label it as USD. You can just type in a number and send it to another username, or you can scan a QR code to pay at a local merchant. And there's about 8,000 merchants where you can pay directly now, mainly in Venezuela. But so you can deposit or withdraw with like Venezuelan bolivars or Argentine pesos or Colombian pesos or various different cryptocurrencies. And so I'll show you right now. I'll make a withdrawal to a Venezuelan bolivar bank account. So let's say we want to.
Okay. So you are depositing now, or are you? You're getting USD to another Venezuelan bank. Is that what you're doing now?
Yeah. Okay. So I'm going to take $5, and it's telling me that I'll get 22.2 Venezuelan bolivars.
Right.
And that would have been 22.2 million as of a month ago, but the currency has been redenominated.
Oh yeah. Okay. They've striped off a few zeros.
Yeah. Okay. So I already have a Bolivar bank account connected, so I'm just going to accept here. Type in my PIN for the whole world to see.
Nice. Write that down, chat.
Yeah. And now this transaction is in process. And so what's happening in the background is, okay, now the transaction is complete. So in those few seconds, a lot happened. So I, as a user, got matched with one of many different, we call them independent liquidity providers in Venezuela. And those are like foreign exchange brokers who basically are connected to the reserve system, waiting to take such transactions. And so I got matched with one of them, and my reserve stablecoin balance, in a centralized way in the reserve database for this app, got transferred to that liquidity provider. And then in response to that liquidity provider sent out a Venezuelan bolivar transaction for 22.2 Venezuelan bolivars to the bank account that I had connected.
Okay, and hold on. Is the liquidity provider, is that a Venezuelan bank?
It's not a bank. They're using a Venezuelan banking account to make the transaction, but the liquidity provider is an independent business. Because in a country like Venezuela, when you have hyperinflation and like capital controls, which those have been dramatically loosened since then, but you get a whole lot of independent businesses springing up to provide liquidity to allow people to trade back and forth between foreign currency, usually the US dollar, and the local currency. So we just went and found a bunch of existing businesses that already provide liquidity between normal US dollars and Venezuelan bolivars, and we plugged them into this system, because normally they would only really want to provide that service to larger like high net worth people or businesses so they can do large trades at a time. And they wouldn't want to do like a $5 transaction like this. It wouldn't be worth their time and energy. But through automation and like building a marketplace, we've made it profitable for those currency brokers that ordinarily wouldn't touch normal like retail people to provide the same service to ordinary retail people through this application. So that's fundamentally sort of the innovation there.
Okay, and then the brokers are connected to the USD system.
The brokers, yeah. So the brokers are connected. Like they have balances in our reserve stablecoin in this app ecosystem, just like the normal users, and so yeah, they're willing to buy and sell, and I'll show you right now. If you look at the price to buy dollars, to make a deposit, which is effectively buying dollars, you'd pay 4.58 bolivars. Whereas if you're selling, you only get 4.44. And that spread is how the independent liquidity providers make their money.
Yeah, okay, that makes sense. And why are the independent liquidity providers, so these are like the middleman, right? They make the connection between your application and the Venezuelan banking system in this case, right?
Yep.
So why are they why is this better for them than, if this was just a USD bank account?
So they actually don't care. So now we get to the part where, like, why does it matter that it's crypto?
Yeah.
And there's sort of
I wanted to avoid it, but we still got to it. Okay.
No. I think it's an important question.
Yeah.
Yeah, it's an important question. So a lot of people think about cryptocurrency as being interesting because the individual at sort of the end user can hold it directly and be fully in control of their money and be subject to fewer rules and limitations. And that's true. What people don't realize is that the same thing applies on the business level. So we as a business offering this service to people in Venezuela, if we wanted to have all of these balances held directly in the banking system in the US, that would be very difficult. It'd be very difficult to persuade any US banking institution, hey, we're going to open up lots and lots of sub-accounts for people in Venezuela.
Yeah.
But because we're using a cryptocurrency, we're holding custody of those crypto assets, and then those are backed by US dollars by those initial stablecoin issuers. But they're not directly responsible for who our customers are. It actually has created, from a regulatory perspective, a layer of separation where we can take on our own responsibility directly for our end users and make sure that we don't, for example, deal with anyone who's sanctioned by the US government. And so we have a very careful compliance program and very careful filters for who can get into the app and so on and so forth. But we don't need to persuade a US banking institution to bank those customers. And so what this means is that it prevents US banking institutions from censoring us as a business, as opposed to preventing us from censoring our users. We can still censor our users, we can still shut down our users' accounts, and law requires that we do that sometimes.
Yeah.
In the longer term, we can take that one step further and make it so that users can hold these balances directly in the app, and we are going to do that, and that does provide further benefit and further protection for those individuals. Where at that point we can't take away their money and we can't prevent them from making large transactions or anything like that. And I think that is actually honestly good for the world. The reason why we haven't done that yet is because basically the transaction fees on Ethereum are way too high. And we didn't want to switch to a different blockchain. So there's this whole complicated crypto discussion of how to make transactions cheaper and faster. And we're going through that technological process along with the rest of the ecosystem before we can allow people to hold the tokens directly. Yeah. But it's still actually not the case that we could have offered this service to Venezuelans had we not used crypto to custody those US dollars.
Right, because you're basically acting like a bank, but you're not a bank, and that's beneficial for you because you're not regulated like a bank. Is that correct?
That's part of it, but even say PayPal or Cash App, they're not banks. They're money service businesses that rely on banks to hold the assets for their customers. But that means that they're dependent on permission from those banks. They need banks to be willing to hold the custody for those users. And that's really where the rub is. If you want to offer service to people in a country like Venezuela, and this is probably true also for people in like Lebanon today, it'd be difficult to get US banks to be willing to provide service to you as a fintech company.
Yeah.
And so basically us being able to take matters into our own hands and hold custody of those funds directly via the crypto assets, that's the key. That's what makes the difference.
Okay. I think so I would still view that as, I think the econ sort of technical term, it would be regulatory arbitrage. And I know that this has a lot of negative connotations, but I don't mean it necessarily as that. But this is just for me to sort of make the most sense of it. Why you are operating like a bank, but you're not a bank, and that you can provide a service to these people that you would otherwise not be able to. And you did mention that there are a couple of ways why this how this works, like what regulations you don't have to then do. Did I summarize that in a fair way?
Yeah, and it's actually I think that's a fair high level summary. I think it slightly mischaracterizes the situation because we're actually not subject to any less regulation. It's just that we're like fundamentally what's happening is we don't have to deal with any other business's risk assessment. Ordinarily, a fintech company needs its banking partners, like the compliance and risk team from its banking partners, to decide it's worth it to deal with this business. Whereas in our case, there's no other banking partner involved that has to decide it's worth it to deal with us as a business.
Mm-hmm.
We're still subject to the exact same regulations in terms of anti-money laundering that we would be if we were an ordinary fintech. So it's basically making it so that we can control our own destiny, and we take on that responsibility and liability directly instead of it sort of being like passed through the bank. But I think it's still fair to call it regulatory arbitrage.
Okay, great.